Hey harvesters, and welcome to the channel. My name is Matt. In today's video, I'm going to be talking about the trades I executed for July 3rd. I'm going to talk about the covered calls, the cash secured puts, and the considerations I made choosing strike prices, and then the balance between premium and appreciation gain. So we'll talk about that. Then we're going to take a step back. We're going to take a look at the last 58 trading days that I've been running these covered calls and cash secured puts. We're going to make a determination together. Is this an actual viable strategy that can potentially help you make an income stream compared to the long-term buy and hold? So take a look at that, but that's pretty much going to sum up the video. I don't really want to go into what I plan on doing for Monday, July 7th, because it's going to be a 4-day weekend or 3-day weekend, and the numbers are going to be quite different than today than it is going to be on Sunday night. So I might just make another Sunday night update video, and people have been requesting me running some analysis in the pre-market. That is something I might add. That might be another video series I might add in the mornings. So stand by. I'm thinking it might be a short. Maybe if you guys request a long form content, I'll kind of figure out what makes the most sense with my time constriction, because that's when I need to start commuting into the office. But we'll figure something out here. But with that being said, guys, for anyone that is a new viewer to the channel, this Robinhood account and this YouTube channel is dedicated for income generation. This is not the buy and hold type of investment series. This is we're going to try to make income, and then we're going to try to grow our accounts by making more income. And the way we do that is we run covered calls and cash secured puts, and you're going to follow my journey to either success or realize this is not a good investment strategy. But ideally, it's been going pretty good the last 3 months. So let's just start diving into the numbers. For my Robinhood account, it is currently valued at $167,083.85. I started trading these covered calls and cash secured puts back in April. Started with about $86,000. I threw a little bit of money here and there, and then now the account is valued at this $167,000. So I will say it has been going pretty good. Now let's head over to the spreadsheet. I'm going to talk about the trades I executed for July 3rd, talk about the strike prices, and let's head over there. All right, guys, now that we are looking at the July 3rd part of the spreadsheets, let's dive into the nitty gritty. The first thing I did right off the rip when the market opened is I bought 100 shares of QQQ at the 554.23. I was being very conservative the last couple of days. I think maybe the last 6 trading days, where I wasn't really choosing prices that were at the money, because I didn't want to overpay buying some shares. And I'm thinking whenever the market goes up, there's going to be a little micro correction. So I was trying to hop in on that micro correction. However, that didn't play out the last 6 or 7 days. So I wanted to gain a little bit of premium. So right off the rip, bought 100 shares at 554.23. When I chose a strike price, I chose a strike price that was relatively at the money. And here's my thought process. I wanted to gain a lot of money per premium. And then with that strike price I chose, I would have made about $77 of appreciation. And what happened at the end of the trading day, this was actually assigned at the 555. So I basically locked in $77 of appreciation, and then I made about $71 of premium running this one specific strategy or this one specific play. So I made $148 off this one item. And the reason I didn't mind getting my QQQ shares assigned, because theoretically I could have held them, try to choose strike prices further away from the money, try to capture some of that upside. But going into the weekend, Robinhood pays about 4.5% interest on the cash you have. So the more cash I have over the weekend, the more interest I'd get. So owning 100 shares into the weekend wouldn't necessarily net me any extra money, but by actually holding the cash, I would be getting interest off of it. So that's just kind of a choice I made, where is it enough interest where it's like I'm going to continue running that every single time? No, there's going to be a fine balance, because if I'm able to get the shares at a good price, I'd be willing to forego the interest I'm going to make, that 4.5% interest that Robinhood pays for cash. So it's kind of like that fine balance. This weekend, I'm more so cash heavy, so I wanted to get that interest. But next weekend, I might do something totally different. I might buy some shares at a good cost basis. I wouldn't want to lose them for a low amount of premium. So that's just food for thought. And then going into the rest of the day, I ran 2 cash secured puts on the QQQ. I chose one strike price of the 553 and another strike price of the 552. The strike price that was closer to at the money was about $71 a premium. The one further away from the money was about $48 a premium, so it was quite nice. But then at this point, I think I had about $39,000 of options collateral available. So I didn't want to leave money on the table heading into Friday. or heading into the weekend. So what I do, I did a cash secured put on nvdy, and then I run a cash secured put on Oracle because I wanted to maximize money. So I made $34 on that nvdia cash secured put, and then made $51 on that Oracle cash secured put. So end of the trading day for July 3rd, I made $352 of premium and appreciation gain, realized gain. So that was quite a nice number. I was shooting for 500 because I wanted to hit another 4-digit week, but I was about $151 shy because shorter week. And then the Monday, because of my jet lag, I got the UK trading hours versus the US trading hours mixed up. So same thing. I started trading 4 hours after the market opened. Never a good thing. Premiums are lower. And because I run dailies, it cost me a little bit of money. But anyhoozle, let's head over to the other side of the spreadsheet and take a look at the last 58 trading days and the holistic view of what I've been doing. All right, guys, you know me. This is the favorite part to my video, is talking about how the trades are going and then tracking the different metrics. So let's take a look at day 57. So day 57, like we mentioned on the other side of that spreadsheet, made $352 of realized gain. That's premium plus appreciation. The account, as we mentioned earlier in the video, we're at $167,083.85. If you look at that number from when I started on April 11th to what it is right now, we're at 14.2%. But I will say this, I put in about $60,000 of money back on May 21st. And then it's been a little bit of time for me to kind of get the ball rolling and get the momentum, having that kind of sum of money. So right now, after about 57 trading days, we're at 14% gain. Most covered call ETFs like jpq, gpix, jpy, they net you about 8 to about 12%. We can even say SPY. Last 3 months, we've outperformed it with the appreciation plus the premium. So therefore, we're at least outperforming that. When we talk about the whole S&P 500, I think we're about right on par with how it's been performing the last 3 months. But last 57 trading days, we have made about $17,728.15 of realized gain. That's premium plus appreciation that was realized. And I will say this, how I operate my investing philosophy. Whenever I make premium, I reinvest that money and I try to buy SPY shares. However, all of the appreciation I gain, I don't buy shares with it. I just leave it as buying potential or buying power in Robinhood, because as the market goes up, it's going to cost me more money to then buy 100 more shares of an underlying. So therefore, for me to have enough cash and buying power available, I will leave some of that appreciation gain untapped so that I can be able to buy that 100 shares. It's just food for thought. And then heading over to my trade win percentage, I'm winning 98.25% of my trades. I had 56 winning days, 1 losing day back on April 22nd, which I'll probably just make a whole dedicated video of what happened so that some of the newer investors don't necessarily realize that same mistake I did. And then in total, we mentioned 57 trading days. The average premium I'm making per day is about $311.02. The average weekly premium I'm making is about $1,477.35. And the average monthly premium I'm making averages to $5,651.88. Now looking here in the yellow, these are strictly estimates based off of my account performance over the last 57 trading days. And this is how I came up with an yearly number. And the way I came up with $76,821.98 is I took the average weekly premium and then I multiplied it by 52 because we have 52 weeks in a year. And that's how I came up with that 76,000. If you look at that as a yearly percentage, that's about 53% return on the money I have. So that way outperforms the S&P 500 or the QQQ or most of like these ETFs. So if that can, if this can stay consistent for the rest of the time I invest, that would be fantastic. However, we are coming off of a massive bull run after the whole tariff correction. So therefore, I was able to capture a lot of upside. So I'm also a realist. We don't know how this is going to perform over the next, 6 more months, 3 years, 5 years, 10 years. But a man can dream. And just based off of my account performance over the last 57 trading days, these are what the potential numbers are going to look like. And then when I started this new investing strategy with the covered calls and the cash secured puts. My account was valued at $86,000. My initial goal was $29,740. I kind of kept that there as like a humbling experience where, hey, even if I make $30,000 off of the account I have, that's still a significant amount of money and it'd be a nice win. But we were only about $12,000 away from meeting that goal. And I think we can hit that maybe at the end of August, but conservatively by the end of September. So let's talk about theoreticals, guys. Based off my account performance, yes, these numbers might not necessarily reflect what the market was going to look like 2 years from now, 5 years from now, 10 years from now. However, it does not hurt to come up with estimates. At least for these estimates that I came up with are based off of this yearly percentage, right? So if I'm making 53% return on a year, these numbers are also going to change. And then whenever a year elapses, I'm going to take the automation away and then we're going to lock that number in and then we're going to change and adjust the remaining columns accordingly based off of my account performance. So as it stands right now, at the end of 2025, this account will be at $185,846,000. For end of 2026, we're going to be close to $250,000. End of 2027, $334,345. End of 2028, about $448,000. End of 2029, $601,000. And end of 2030, so basically 5 years from now, the account is going to be valued at $806,000. But the most important part is how much estimated income we're going to make. So by 2030, if I continue everything status quo, I could potentially be making about $315,000 of premium that year. That is a crazy amount of money. Let's say if we can even get half of that, even half of that would be worth doing this option strategy, these covered calls and these cash secured puts. Now let's fast forward 10 years from 2025. So let's go to 2030. If we go to 2035, the estimated amount of income based off of what my account has been doing these last 3 months, I will continue to beat the dead horse. Might be too optimistic, but that's what the performance has looked like thus far. We'd be making $1.3 million. Even if it's half of that, $600,000 a year, even if it's a fourth of that, that's still a lot of money that I'm going to take any day. And then the account is going to be valued at $3.5 million. And then we can even go further than that. So by the time we retire, we might have $3 billion. Oh, that would be fantastic. Man can dream. But we will see how this strategy performs over time. And hopefully you guys are going to enjoy watching the progress. And I hope that maybe we can do this together. You can start this strategy. We can start racking in this premium, start harvesting this premium. That would be fantastic. So now let's head over to the weekly numbers. So looking at the weekly numbers of the last 13 trading weeks, we had 9 weeks where we hit the 4-digit club. So we're making $1,000 or more. We had a hot streak of going about 7 weeks in a row of making that 4-digit club. But this last week, it was a short week and we didn't really make too much premium. Jet lag Monday, half day for July 3rd. So we still made $849.52. If we had one more day, I wouldn't even hesitate that we'd make that $1,000 or that hit that $1,000 mark, but we didn't and we broke the streak. What does it mean now? We have another opportunity to create another winning streak. So let's get after it. Looking at the monthly tracker, for anyone that's is new to the channel, April was definitely a learning curve. I had my biggest loss on April 22nd due to my lack of understanding of these options. The market was severely underperforming. I chose strike prices that were below my cost basis. The market shot up because of good tariff news or some deals that were about to be made. So then I rolled my options higher because I rolled my options higher on the same day, thinking that the market wasn't going to go any higher, but then the market continued to blast past it. And if you're only running a covered call of his daily and you didn't choose a different expiration date, you cannot re-roll your option 30 minutes before the market closes. So therefore, I didn't know that. And then I realized a $1,700 loss. If that $1,700 loss never happened, April would have looked a little bit differently. It'd be closer to almost $4,000. But that didn't happen. That's not the reality of things. I didn't understand these options, lost a little bit of money. But then since April 22nd, I have not had a single red day, and we are continuing to crush harvesting these premiums and these appreciation gain. So that pretty much wraps up the weekly, or that pretty much wraps up April. For May, we hit that $8,000. We just wrapped up June. We had a nice $6,593 month, which is, if I can consistently make somewhere between $5,000 to $6,000 like that, I'd be a very happy man. You would not hear me complaining. The numbers we talked about, the theoreticals and estimates, they're great, but if I can just make an extra $1,000 a week, $52,000 a year, that's a win in my book. Maintain that for 30 years, that'd be great. Ideally, I want to, get off a W-2 income faster than that. However, when I do get to retirement, I'll have a little bit more buffer, even if I'm not able to retire sooner. But then for July, we've already had 3 trading days, and we're already at $772.52. And I'm thinking we're going to have a monster July. And as I mentioned earlier, for the yearly tracker, we are already at $17,728.15. Like I said in the beginning of the video, guys, I am not going to go over what I plan on doing for Monday. I think it's too far away to actually come up with relatively accurate numbers, and I don't want to lead you guys down a trail that's like talking about theoreticals. I'll just make another video on Sunday and then kind of highlight maybe the best approach moving forward. Yeah, guys, that wraps up the video. Stay disciplined, stay locked in, stay harvesting. Matt out, and I will see you at the next video.